Here's how you can trade turtle soup to catch tops and bottoms like these trades right here that I traded with my Discord, and how to overcome that fear of trading a turtle soup and being more confident in your entries. So in this video, I'm going to explain to you what turtle soup is, but also in a very simple way to where you will never need to watch another video on turtle soup again. So what turtle soup is selling a old high or buying a old low, pretty much entering on the sweep of liquidity. But that is a little bit too mundane. At the end of the day, you cannot be buying old lows and selling old highs every single time. I'm going to break it down and how you could trade this model very consistently and catch really high RR trades consistently. You must understand the importance of time in when trading this model, because the market algorithm is programmed to move during certain times of the market, so you want to be entering during those times to increase the win rate of this model. The turtle soup is a reversal pattern, meaning we have to be at price in a specific time and place to catch the reversal in which the market is going to inject liquidity during that specific time. So the basics of turtle soup is just entering on the liquidity sweep. But one of my favorite ways to trade turtle soup is where we have that turtle soup right here form a inverse fair value gap where we come down from a V-shaped recovery off that turtle soup and you enter on that retracement to the inverse fair value gap. This, in my opinion, is probably one of the most highest probable trades you could take. Sure, you can enter on the turtle soup, right? But you're not going to have that extra confluence like that V-shaped recovery or that inverse fair value gap for the trade, so you probably could get stopped out. So this is why this is one of the highest confluences. Obviously, you have to have the correct draw on liquidity in the market for this to work. Remember, draw on liquidity is the most important concept in trading. Without the draw, you have nothing. London session is very key in this entry model as well, because it is typically known to put in the high and the low of the day for London session before reversing in power of 3. So when it comes to a London reversal, we can anticipate price to sweep a old high or a low before we can reverse. So one of my favorite ways to trade the turtle soup is like a power of 3. As you can see, this is looking a lot like a power of 3, accumulation, manipulation, and distribution. You can trade this with many different ways. The turtle soup is just the confluence for the reversal. You can also enter on a change in state of delivery right here, just like so. So let's take a look at some trade ideas today. So as you know, on the higher time frame, we are in a sell model. So I was bearish going into today, and that is probably the most important thing, is having the right draw before you find your entry. So once you have your established draw on liquidity, you're going to want to trade towards that draw on liquidity. And looking at today, this is one of the trades I did call out to my Discord. And already looking at the charts, you can probably see the turtle soup. I like to use turtle soup in confluence with other entry models as well. So right here, as you can see, we pushed up into this 5-minute bearish SIBI where price rejected off of, forming this bearish SIBI right here, right? So you want to enter on the retracement back into this fair value gap for lower prices. And on the 1-minute time frame, as you can see right here, what did price do? Pushed up, turtle souping these highs right here. This right here is that turtle soup, right? We have that turtle soup. We trade above these old highs, sweeping out this liquidity pool. This is that turtle soup. You very well could enter short right on that next close candle right here, stop loss at the top of the swing high, and just target sell side liquidity or lower. A more higher profitable entry you could have taken is off of this turtle soup. We tapped into this 1-minute fair value gap. We formed this bearish SIBI right here. Boom. You mark out that bearish SIBI, right? Find out OTE of this displacement range and just enter on the entry of OTE in that bearish SIBI. So that would be right here on their tracing back up. Target that sell side liquidity and stop loss at the top of the swing high. And the reason why this trade works so well is because we had a first accumulation manipulation sweeping these old highs with it, which is just a turtle soup. A turtle soup is just that sweep of liquidity, right? Tapping into that PD array, displacing off of it with that turtle soup, making another bearish SIBI where price retraced back to OTE. So this is a A+ trade in my opinion. And the reason why turtle soup works so well is because it's that sweep of liquidity, right? It's that swing high before we go lower. So this high right here is now a protected high in the market, because for a turtle soup to hold true, this high that's caused that turtle soup has to hold as a swing high. We should not see price come back up and sweep this high, because that would make this now a invalid turtle soup. And if you are trading it correctly, this will not happen. If you trade the right turtle soup, it should not violate that swing high. So let's look at some other trades I've taken. Right here, as you can see, this was a turtle soup trade. I entered purely off that soup of liquidity. I knew the draw on liquidity right here. Price came up, souping this internal high, tapping into this PD array right here. I entered short off the candle right here, and target sell side liquidity. Here is another example of a turtle soup I caught on Friday, which brought me 420 handles. So right here, as you can see, this was that internal liquidity level right here, internal sell side liquidity, where price came lowered. Turtle souping this low, sweeping that level of liquidity, accumulation, manipulation, and off that turtle soup, we tapped into this PD array right here, this 1 minute imbalance, where we displaced off of, forming this fair value gap. So that's where I entered off of, and all you do is target that draw on liquidity, and as you can see, it works very, very well. So that is essentially how you trade turtle soup. To recap, this is what it is: sweep of liquidity into a PD array. Preferably, it does not always need to be into a PD array, but that would be ideal. 3 is time has to be right in the market. So it has to be during a trading macro, like a kill zone or a macro inside of the kill zone. And then 4, reaction. So enter on the next candle. But that is essentially how you trade turtle soup. Thank you guys for watching. If you have any questions, leave in the comments below. And I thank you guys for watching. If you stayed to the end of this video, please leave a like. And I'll see you guys later.